Yo, what's up, everybody? It's Friday, October 27th. So another rough day. NASDAQ was up. Another rough day in the market. Folks, October typically is like a negative time for stocks. And it's completely understandable when you realize that we've been through two back-to-back tax drains, one in September and then one in October. It happens every single year. Last year in October, that was the bottom of a market sell-off, and I called pretty much the exact point where it turned around, and then we had like almost a 30% increase in the S&P. I think it was like a 28% increase in the S&P. And went all the way up until this July when I was sending out, warnings to my subscribers that they should be raising cash. I talked about that yesterday. And I also said yesterday that this was a buy window, like this is where you want to be buying. And I see a lot of headlines. I see a lot of commentary to the effect of, here we go again with the recession and how horrible it's been in the stock market. The way I see it, and again, this goes back to something I said, I don't expect you to not be a little bit unnerved by it or disappointed or frustrated, or maybe some of you even scared. I don't know. But it's like, if I think about it from the perspective of how we behave as consumers, right? I mean, if you imagine if your favorite retail establishment or your favorite product or service went in deep discount. I mean, if you think about it, in this country, in the U.S., we have this Black Friday, right after Thanksgiving. Sometimes we have like these Amazon Prime days when things are really, really discounted. And what happens? I mean, people rush to the stores or they rush online to take advantage of the price discount. It's only in the realm of investing and markets that people do the opposite. Like when prices go down, they panic and they sell out. Or they run away, or they just, they sit on the sidelines and they hide. And then when prices go up, they chase after it. Take a look at gold right now. Gold had a fantastic week, and I just looked again at the data from the CFTC, the Commitments of Traders data, and there was very aggressive selling again for the second week in a row by the producers, gold producers, and the banks. And I understand where the rally is coming from. I mean, this is pure speculative activity. Speculators run into gold because of the war and stuff like that. I mean, I saw that too in the data. We had a very big increase in speculator long positions. But at the same time, as a matter of fact, producers were selling in a magnitude that we have not seen since like the first week in January of this year. And by the way, that first week in January, that was very close to a peak in the gold price. And what followed was like 120-point decline. All right. I'm bullish on gold for the long term, but I never chase. And not just gold. I mean, stocks, the stock market. If I trade Forex, I just, I never, and I always tell people, never ever chase. And there's two reasons for that. Number one, if you chase, there's three reasons really. Number one, if you chase, you're going to pay the market's price. And that's not a good thing to do. Number two, when you learn how to just kind of sit back and wait for your price, that is an exercise in developing discipline. And discipline is very, very important. Discipline is a way we control our emotions. And that's the number 3 point, that when you chase, you're acting out of an emotional impulse. And that's no good. It took me a long time to understand that it's okay to miss a move. There's always going to be opportunities. I mean, there's always it took me so long to learn that. I was always a good analyst, but then I never really had control over my emotions. I wasn't disciplined, and then I would see things and, I would chase after them. Maybe I would hesitate, and then it would go the way I thought, and then I would chase after it. And that was always a losing proposition. So I'm telling you, like, if you're looking at this gold thing, and if you're kicking yourself because you're saying, oh man, I wish I was in it right now, look at gold, blah, 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 the stock market's going down and gold's, I'm telling you, don't beat yourself up. You'll have an opportunity to buy gold at a much lower price. I mean, when you see gold producers, because they were, folks, and I was talking about this. They were big time buyers when we dropped down below 1800. And I was saying, you got to be a buyer on the dips. You got to, when it got down to mid 1800s, and then it got below 1800. And they were in there buying like crazy. And now they're selling like crazy. So don't chase after it. And I think the most important thing you could take away from that is, that number 2 concept that I talk about, which is developing self-discipline. I mean, it's almost good. I'm going to say this. It might sound counterintuitive or wacky, this idea, but it's almost good to miss a move because it makes you get acclimated, get accustomed to the fact that sometimes that's going to happen. Remember, I talk a lot about, how do you build resilience? How do you build mental toughness? It's going through these periods where, maybe you have positions that are going against you and you have to ride it out, like the mariner on the open seas in a storm. But you know where you're going. You got the weather report ahead. It's going to clear up. You got to make it through the storm. Or in this case, you're not in it and you got to hold back your emotions. You got to hold back your burning desire to jump in there. It's just, I'm telling you right now, if you jump in there chasing gold, it's not going to work out. You're going to lose money. You're going to lose money, or you're going to be sucking wind heavily when this thing corrects, and then you're going to miss the opportunity to get in at a much better level. So just keep that in mind. And the same thing now with the stock market. Like, if you're panicking, if you're selling out, that's even worse. If you're sitting on the sidelines, shaking in your boots, wondering what you should be doing, I mean, try to envision or try to see yourself in that kind of consumerist behavior. Think of it like that. Like, what would you be doing if your favorite item or items or brand or something is on a deep, deep discount sale? You'd want to buy it, right? I mean, if you had the funds available, you'd want to buy it. Or let's say it was another asset. Let's say it was something like, I don't know, real estate. Okay, a piece of land, a house you always wanted to buy and it was too expensive and now it's really, really cheap. What do you run away from it? So that's the way you have to think about it. And that's the way you have to behave. That's what's going to bring you the results that you want. So anyway, let's talk a little bit about the flows. We are back. Government balance is back in a deficit. That is a good thing because the deficit equates to an addition to the financial balances of the non-government. That's the economy, that's us. The only problem is the deficit is only like 10 billion. It's small. But remember, we went from like a 40 billion surplus to a 10 billion deficit. So that's a 50 billion positive swing, water in the swimming pool coming up. The only thing I would point out is that we're about 55 billion still below where we were at this time last year. That's not insignificant when you're talking about just in a 1 month period. Some of the explanation for that is the fact that we had a pretty significant tax drain this October compared to last October. So, and the other part of that explanation is probably these student loan payments. Now, I forecast that the student loan payments would drain like 70 billion for the entire year. But we're already down 55 billion, in less than a month, almost a month. But that's not all due to the student loan payments. I said we had a much more significant tax drain this October than we did last October. I'm not sure why. But I believe that differential, that 55 billion differential, is going to be made up pretty quickly, because we are running, in terms of leading spending flows, I'm not talking about the net spending flows, I'm talking about what goes out first. That's running ahead about 27, 28 billion ahead of last year. So we're going to catch up. And by next week, I think by next Friday, when I run the numbers again, we're already going to see a shrinking in that differential. That's a key thing. I want to see that differential shrink. If that differential keeps widening, that's not a good sign. See, sometimes you got to be like a doctor. You got to monitor, the condition of the patient. You got the patients all hooked up to these monitors, and you got to monitor all the vital signs. That's what they call it, the vital signs, right? The pulse rate, the blood pressure, all that stuff. So that's what I do. I'm like a doctor. So by next Friday, I'll have more information for you. And my assessment, or my belief, is that we're going to see that 55 billion differential year over year. We're going to see that narrow. And if that narrows, that's all we need to see. Then we're on the right path. Okay? Again, getting back to the mariner analogy, you got things out there, whatever, your compass, your charts, you want to make sure, you line up with, or you see these not landmarks, but these indicators to make sure that, you're on the right path. It's what I'm doing right here. It's what I'm doing right here. And you could see also that I let a week go by. Like, I'm not like, I need to know what happened, 10 minutes ago, and then in the next 10 minutes, and then in the next 10 minutes. No, a lot of that's just noise. I mean, you need time to see how these things develop. Remember, I did a whole video on, it's not timing that makes you rich, it's time. Okay? Understanding time and knowing how to use it. Not timing. I mean, it's impossible. If you're on a quest for absolute precision, you know what that does? That just keeps you from doing anything. That just locks you out of taking action, because, you're constantly trying to jigger that thing just so it's absolutely right, absolutely right, absolutely. You're never going to know for sure. You got to take action. And the way I take action is, I look at the entirety of the data. And it's not so much about, the number per se. A lot of people, the numbers don't match. There's 2 digits off or something like that. I don't care about that. I just look at the trend of the number. Is it going in the direction I want it to be going? If I do a calculation and it's off by, I'm not flying rockets over here where a slight calculation is going to make the thing go way off course and crash. I'm looking at the trend of these numbers. And as long as that trend is moving in my favor, or, if it starts to move against what I think should be happening, and that'll, trigger some kind of cautionary sign for me, that's all I care about. You don't got to make this thing harder than it already is. And the hard part really is not the stock picking. It's not probably not the things you think it is, like the market itself or economic. The hard part is It's you. It's controlling your emotions. It's controlling, it's having discipline. It's learning how to calm down a little bit, and learning that time is your friend. And there's plenty of it. It's not like you got to do something every second. That's how a lot of people operate. Like, I got to do something every second. I remember when I was a floor trader, and the very, 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 very beginning when I started, and I had to set up an account with one of the clearing firms on the floor. I started out on a New York Futures Exchange, and the guy who was the manager there, and he took me in, and I set up my account. He said, trade a lot. Trade a lot. And so I listened to him, and it didn't get me very far. It took me a long time to realize that less is more. All right? Now, on the floor, when you're a floor trader, you tend to trade a lot because it's just that frenetic activity that it kind of draws you in, and everybody's screaming and shouting. Those days are over. I experienced those days of the floor and the open outcry system. Everything's all on computers now and electronic, but I mean, so when you were in there in that pit and everybody's screaming and, yelling and prices are flying around and, you just get sucked into that, man. It's just something you get sucked into. And I used to think that was cool. Well, it was cool. It was a lot of fun, and I'm glad I got a chance to experience it because it doesn't exist anymore. I was lucky in that regard. But I used to go upstairs and visit my friends who are like, we called them upstairs traders. They were maybe sitting at desks in brokerage firms or something like that. It's kind of quiet, and especially these guys are just like kind of trading on their own because, some of these trading floors, like I remember one time I went up to them, and I think I told this story a number of times how I was invited to go up to Morgan Stanley. They had a big client, and I knew this guy, and he took me out for lunch. And then he said, come on, I'm going to take you up to Morgan Stanley. That's where he had my account. He was this very, very wealthy Egyptian guy. And I went up there to Morgan Stanley, and there it was not quite like the trading floor on the floor of the exchange, but it was crazy with activity. But most of that activity were brokers filling orders. It wasn't even like their proprietary accounts. But when I used to visit my friends who, they would sit there, they'd rent a little office somewhere, and they'd sit there and they'd stare at the screen all day, and it was like totally silent and quiet. I'm like, how could you do something like this? Like, I want to be down where the action is, Anyway, remember, less is more, folks. Less is more. Anyway, it's Friday. I got a boxing lesson in about an hour and a half, and then I'm gonna go enjoy the rest of the day. Speaking of boxing, you guys gonna watch the Tyson Fury Francis Ngannou fight tomorrow? I think it's 1 p.m. Eastern time, and so out here in LA it's gonna be 4 p.m. I'm definitely gonna watch it. It's interesting. I never really used to watch boxing too much. I watch mostly MMA, but now that I do boxing, I like watching it because, when you do something, you like to watch people who can do it on a very high level just to see, what that's like. You can learn from that. Just like you learn from me when you're trading, right? Hopefully. All right, everybody. Have a great weekend. Bye.